Bosh, how's it going everybody? My name's TradeX, this is my trading den, and today we're going to be looking at a deep dive into smart money techniques. This is where we're looking at divergences between the indices to give us confluence in directional bias. I often use it with inside of search and destroy settings to pick highs and lows before the aggressive displacement. We also touch on the six sister concept as well within this video. So this is a live recording I did last week that I have edited into a concise video for your enjoyment. If you have any questions, guys, make sure to drop them in the comments and I'll make my best effort to get back to you as quickly as possible. As always, guys, if you find value in this video, please do consider smashing the like and subscribe. And so without further ado, let's get this intro rolling, then we'll jump straight into the good stuff. See you on the other side. How we can use SMT is that we can look to see what lows and what highs have been taken and then just play tag on the opposing side as the other one plays catch up. Let's go back to this piece of PA here, which was when we were here. And if you remember, I was looking for 92, which was ultimately where we got to in the PM session. We will get there. But I'm focusing on this piece of price action here. Yesterday, I traded here, and I traded here, and I traded here. I took all of these bounces on the lows. But why I got out here is first and foremost SMT. When I see price struggling to break through a high, I immediately revert to SMT, see what NQ is doing. And if we look on the SMT, we can see NQ had diverged and taken the highs, and we had this turtle soup on this high. As soon as I saw that, I got out of this trade. And now I'm looking at the lows. Now, if we look at the lows, I'm looking at this pivot low. And these become clear as day. Your eyes just train to these over time. But this low on ES took it here. But NQ failed to take this low. So when we had the divergences on the highs, I was anticipating NQ to run and take this low to play catch up with ES. Now, I'm not talking about YM, but YM's doing essentially the same as ES, right? So I'm just talking about ES for now. You want two of them to be doing the same thing and the other one playing catch up, right? So NQ ran down and took this low, taking the low that ES took previously. Now, this is where it gets even more complex. If you remember yesterday, I was saying 44 needs to hold on NQ for ES to continue to hit 92 in this run. What I mean by that run is in that session. Why I was choosing 44 is because it was this point of origin. This is a point of origin where price was accumulating, price has moved away, come back to this point of origin, you're expecting price to respect this level. Okay. Now, if it breaks this level, so if it breaks this point of origin, you would anticipate it to pull ES down. And at that point, you'd have a market structure shift and you'd be anticipating further bearish price. But what we had when NQ took this lows was that ES and YM were showing relative strength. They didn't need to take this low because they had already taken this low here. And all we're waiting for is NQ to take the low that ES has already taken. As soon as price is now showing relative strength after NQ has taken the low and played catch up with ES, we now have an unfilled objective on the highs, which is ES not taking the high that NQ did. So when price, and let's just be clear, when price was here, this is no man's land. This is where I wait for one to be taken, either the highs or the lows, and I play accordingly. So for example, if 92 had taken first, I would be taking the lows, right? And I'd be expecting lower prices because then they would have all fulfilled their objectives. But because price had already taken the highs, we were anticipating NQ to run the lows. Now, as soon as they've run the lows, they are now all in confluence. So we can anticipate price to drive to take the inefficiencies on the buy side, but also for ES to take this high. Now we can overlay this onto search and destroy. And what do we know about search and destroy is that inefficiencies and imbalances will price and we're going to get pooled liquidity. So what was above it? It was that 92 figure, which was that little 1 minute SIBI and this order block. So when price got to 92, what had happened up here? They were all now in confluence with having taken the highs. We don't need NQ to take this high because all we're searching for is ES to take this high, which NQ had already taken here. And if you can see this same high, which is this high and this high, YM turtle suited it. Now they are all in confluence with taking the high. This sets up the grounds for price to run down into a deeper discount. The reason why I had 92 was for this exact reason. And you can see what's happened since. As soon as we hit 92, we had this huge sell-off. So someone mentioned earlier, why did we have the huge sell-off at 92? Well, this is the reason why. Because they were all now in confluence with taking their highs, and they'd all filled their lows inside of search and destroy, which, as we know, is accumulation. So a lot of people get confused about how to trade search and destroy. Not only do you know how I trade it, which is looking for a range, looking for inefficiencies and imbalance within inside that range, which now forms accumulation, a period of accumulation. Then we're looking for the inefficiencies and imbalances to be filled inside of that range. And we're playing liquidity tag using order blocks underneath the engineered liquidity. And we're trading the extremes. And then overlaid on top of that, we're using SMT. And we're looking at what divergences we have on the highs and lows and waiting for them to play catch up. Okay, so if our macro is bearish and we're looking for price to run down into a discount, which is what we were doing here, we were waiting for price to run down into a discount. We're waiting for a situation where we can go and take a trade and take it into a discount. Well, until they've all fulfilled their objectives on the highs, market isn't going to move. It's just going to consolidate. But once ES, or in fact before, once NQ had taken these lows, that set up the grounds for ES to run the highs. Okay, so how could you have targeted low-hanging fruit up here? What's the low-hanging fruit objective? Well, obviously, you can do standard fib extensions, what have you. But this is where my eyes immediately go back to the lows. And if you see, during the overnight session, this period of price action here, took this low, which is this low here, and YM had taken it. What had ES done? ES hadn't taken this low because its objective was to come and take the high. Remember, we don't need NQ to take this high, because it had already taken this high. Right, so we're not bothered about NQ now reaching this high. But once ES had fulfilled its objectives on the high, NQ had already done it previously. It did it in the previous session. And YM had caught up. Now they'd all taken their highs. We can now go and target the lows. So your low-hanging fruit would be this low, which NQ had taken. And then you just target price in a discount. It sets up, these are where you get your explosive moves. So this is why I was talking about 92 yesterday. This is why I was saying 15, 30, 44 needs to hold for us to get up here to then reject. That is how I trade SMT. And that is how I trade search and destroy. And that's how I look for explosive moves out of accumulation using SMT. So you waiting for them all to be in confluence. The exact same premise has applied today, but over a wider range. If we go down on today, this price action, again, we can use SMT for forming our bias, right? And I'll just recap it very, very briefly. Go to NQ. NQ had taken and filled this BISI at 5 a.m. If we look at ES, ES hadn't at 5 a.m. So we already had a six sister whereby ES hadn't fulfilled the objectives on the lows. So we know the lows haven't been taken yet. And also on the highs, if we go back to this period of price action over here, this high here, this is between 3 and 4 a.m. This is in the London Open kill zone. This high was taken on ES. It was also taken on YM, but NQ failed. So automatically I know the highs are suspect on NQ to be taken. Then we also play into the fact we had a six sister on ES. So what were we when we were here? Like, we were in no man's land, right? This is what I was saying. I'm doing nothing until one of the other has been taken. Whether it is NQ taking its highs or whether it's ES playing catch up on the lows. Now, as soon as the lows get taken, your immediate objective is the highs because they've all fulfilled their objectives on the lows. All now taken these. So the only thing left to do is for NQ to go and play catch up. So if you want to start framing entries, your aggressive entry would be a full catch up of NQ, which was bang on a fill of this BISI. If you missed that, you could have waited for a more technical setup, box setup, order block, bang. This gave me the confidence of a bullish bias, guys. And you can see the NQ, the divergence on NQ was here. It was during the London Open, and you can see you don't need NQ to take this low. NQ doesn't need to take this low. NQ had already fulfilled its objectives on the lows. It had filled this BISI. So all we're waiting for is for ES to take its low. So we had divergence on the low. So in this instance, we had a total suit on ES because ES was playing catch up. But now that they've taken their lows, we're now looking for NQ to come and take its high. Low hanging fruit would have been this high.
Guys, I hope you found that useful. The biggest takeaways are, if you're inside search and destroy, make sure you're checking your SMT to check for divergences on the highs and lows. You're waiting for all of the indices to be in confluence before the aggressive move will take place. Equally, if you're looking for a 6-6 concept, wait for them to catch up, and then you have precedent to take your trade. If you can then combine that with higher time frame bias, withdrawals on liquidity, if you're in a higher time frame discount or premium, for example, and you're expecting price to move up, this can give you the explosive moves and the entries to take those trades. If you found value, please do consider smashing like and subscribe. Until next time, trade safe, trade smart, and I'll see you on the other side. Take care.